This is Mihai from FX Instructor. Let me know, please, if sound is all right. We can get started. Okay, all right. Let's kick off then. So, guys, we're looking at the GBP pairs at London Open. Since the daylight saving change, we are meeting now exactly at London Open. So I think it's going to be more exciting to look at the market around these levels. There is probably some movement in the market right now as we speak. I'm actually waiting for the current high to be taken out. All right, let's start with the daily chart. So as always, we're setting up the big picture first on the daily, then move on to the 4-hour chart to see what direction is indicated by that chart, and then follow up on 15 minutes to see what entries we have for today. So this is just a daily picture. I'm looking for key levels of support resistance that could be relevant for today's trading. There you go. A major level of resistance last week. If you remember, guys, I was mentioning a level of resistance on last Tuesday, and it was a bit too early. I think we were around here. Finally, we had the push all the way up to the major level of resistance. Okay, there's an area of resistance here. Here you go, from this level here. That's the lower side of the resistance area, which is 166.30. Okay, previous resistance is in almost all attempts. I think a bit lower. I'll just use this high right here because it's the one apparently the lowest. Okay. All right, 166 exactly. And we have the upper side of this resistance area right here. Last high at 6692. Okay, obviously we're looking at a key area of resistance here, which gave a very abrupt rejection last week in the GBP pairs. Not only GU, but GJ reacted the same. We also have this level of support, the one where we initiated the big move up and the break of trend line, okay, which currently gives a mild bullish view to this chart. All right, and finally, we're looking at the moving averages, and we see that we are in a consolidation area. We are at a level where anything is possible because we're very close to the 60 MA. We are in an undecided scenario. The moving averages are actually caught here in a mixture of bullish and bearish signals. Officially, we are bull, but basically the 20 moving average did not have time to climb up. And the last move down is still a bearish move, so we have to be careful if this move is continuing because we are currently retracing a bearish move. All right. What I want to point out here with relevance for today's trading is this level. Okay, 6270. I think it's slightly higher. Yeah, no. It's right here at 6272. Key level of support before, okay, and it's where the moving averages are, and it's where the previous support was, okay, and it's where the trend line is retested. And we did have indeed the retest yesterday with a bounce. However, the close of the candle was positive above the trend line, which means the bulls are still holding on at these levels. Now, from a daily perspective, my chart is bullish. I'm saying this for those traders out there prefer swing positions. Okay, those of you trading midterm with very big targets, well, this could be a nice area of re-entering long for targets of 170 and above. Now, of course, it's not clear yet that this is going to work. But we are actually retracing. We are above the trend line. The trend line break was confirmed. The retest finds some support. So if there's something short term that you can take with extension towards midterm, well, it's the bullish direction that looks favored on the daily chart. All right, now let's see the 4-hour chart. We have a very big drop happening here, all the way down to the previous support, 6272, the one we just mentioned. We're in between the 60 MA and the 200 MA. My indicators are bullish since yesterday. Rate of change turned bullish in London session yesterday. Gave me some weird too early signal, and I got caught in one of them. I managed to recover my loss later in US session. Yesterday during London, I took 2 losses on 2 trades, one long, one short. Apparently both of them taken a bit too fast, and managed to recover pretty well in US session. However, the market is complicated here. It's quite choppy. Okay, we are in an area of consolidation, as you can see. Okay, right here. However, the long side is now favored also on the 4-hour. The indicators are long bullish, both the rate of change and my trick. The wave pattern looks like correction that does not yet fulfill all the conditions for a nice ABC. I'm thinking of a 164, 164.20 target. Okay, so also from a wave perspective, we still have some room to go up. The 38.2 level is the level I'm thinking about as a target, right above the 164 level. We'll see if this has any relevance for intraday trading. Okay, here you go, 4-hour level. And let's see what else we have. Yeah, we have what I call a swing failure right here at the 60 moving average. We did not find support exactly at 60 MA, but we do see right now the 5 MA finding support on it, and we see the current candle. I'm going to zoom in on it so you guys can see it better, you see. We are climbing up, and if the current candle closes above the 5 MA with a distance, we see that the slope becomes positive. So basically what I want to find out here is this going to cross through the 60 MA, giving me a crossover, or we're going to stay above the 60? So far, it looks like we're staying above. Now, for how long, this is not the point right here, but it shows there is some balance above the 60 moving average, so the direction remains bullish. The small trend line we're following right now is right here. So as long as we are trading above this trend line, the direction remains long. So I can say for now that the 4-hour chart agrees to the daily direction, which is pretty good. And the wave pattern is here. Of course, it's a retracement pattern, so you can't really expect it to go up more than just another high. This can take only a few hours, or it can take longer, it depends. Here you go, the wave target is, let's see where it goes, 64.38. Now, I can't, of course, say for sure where it's going to stop, but I can give you guys possible targets. I'm thinking about this level, which is a previous level of resistance, previous level of support. As a final extension, I'm thinking about 165. If not, I'm thinking 64.15. And I think this is it for now on the 4-hour. We'll see if we manage to find something else on 15 minutes. Okay, we move on to 15 minutes. And here, I think we are again confirmed into a bullish view. Okay, this is the first wave. This is a corrective wave, ABC, that finds a double bottom. I think it's somewhere at a key level of Fibonacci. I'm usually looking at the fibs after the fact, not really trading the fib itself. I'm just looking where it stopped, so I can see if there is a relevant level of support. Not really. On the fibs, we're right in between 61.8 and 78. So I'm not going to keep this fib here. Doesn't seem relevant for now. what I like more about this scenario is the current move is bullish. We are facing very strong resistance at the 200 moving average. Direction remains bullish though. And it looks to me like we are trying to break above the previous high. We put a fib on the previous down move. Here you go. And you notice we are at 78 fib. So this makes the level, the 78 fib level, and slightly above where I'm planning to add to longs. I already have a long 6350 with a stop right below the central pivot at 63. Well, it's not really right below, it's 6310, 40 pips of risk. I'm planning to add right here at a break of 6378. Should be somewhere in the next hour. Okay, if we break that, I want to take another 40 pips on this position and conclude. I will have an entry somewhere, average somewhere at 6360. Take my profit around 6415 and get out. I'm not sure yet if I'm going to keep a runner in or not. Probably not. Because we are in a retracement, I want to take my profits. I will be happy with whatever I can get from this move. Now, finally, guys, moving average wise, we had yesterday this first attempt to break the alignment, the bearish alignment, and this is where I got my first stop hit yesterday. Okay, on this on an attempt to go through the 60 moving average, I was too early, and then once it realigned, the New York session gave me a few pips, but this is actually a key element of the realignment setup that I'm using on the moving averages. Do not insist on taking a lot from the first alignment of the moving averages after a big drop. Now you can see the big drop is very obvious since last week. Pound dropped like a stone, and right now we are in a correction. It's quite clear. However, this was the first alignment. It gave us something, but the move down was very abrupt. So I didn't stay to see this happening. Now, after the moving averages fell back and the price fell below the 60 MA once again, I'm not doing anything. I'm waiting for it to climb back up and give another alignment, which is the second one and the actual signal I'm usually using. Okay? And here you go. Here you have it. 6350 is where I managed to take it. I actually took it on a spike, went down with it, okay, and then set up the stop once I saw the previous high taken out. My initial stop was all the way down here. I like having at least two or ideally three elements of protection when I set my stop, not only the central pivot, not only the moving averages, but also the previous lows, the previous double bottom. So if everything fails, my trade fails and I get stopped out. If not, you see I'm using the fail-safe of one of these three elements. Now what I have right here is a confirmed bullish setup with again, not such a great perspective, probably around 50 pips, 60 pips to take from this trade. I'm hoping to manage to take this in the next 3-4 hours. But that's really all I want from it. I don't think it will go too far. And definitely in such situations, I'm not insisting on buying as the market goes against me. Okay? When I am with the big trend, sometimes I am re-entering even at a loss. But in such circumstances like this one, you don't want to insist. If you are wrong, if you are proven wrong, align with what the market is telling you and get back to the short direction, because this is what the 4-hour essentially is doing. Okay, we are retracing a very strong drop from approximately 167 all the way down here. That's about 430 pips. It's not really a minor move. It's quite a big drop. And right now we are only retracing a few pips here. 100 pips is all we have so far. Not even a 38.2 pip. In case it's failing to make a fresh high, or even if it does make a fresh high and does not sustain the move above, any attempt back below the 200 MA on 1 hour and any attempt actually towards the black trend line here okay, and below the current low at, it's where my stop is, basically, at 163 essentially. Okay, I have 163.10 as a stop. This could be a stop and reverse level, because from here, nothing is really backing up the bullish setup anymore. Any questions, guys, for GU? Or Con, it will be my next pair, my next analysis. Right now, I'm asking on GU before I switch on to GJ. So, conclusion for GU, the daily chart looks somewhat bullish. We have clearly a retracement going on, but we stopped at the 60 moving average. We have the 200 below us. We have the big daily trend line supporting the current move. So I would say the bias remains moderately bullish, and even if the drops continue, I would look for support around these levels. First, this level of support here at 61.50, which is not so far away, and then we're looking for 200 MA and previous support at 160.50. It's not going to be easy for the bears. The bears will have probably full control of the market down at 158. From there, the drops might continue aggressively towards 145. So from there, I'm only going to be bearish, probably even intraday. All right. The 4-hour chart is backing up the bullish orientation. My indicators have turned bullish. Trick is bull. Rate of change is bullish since yesterday, now crossing above zero line. And we have swing failure setup here on the 4-hour chart, about to be confirmed in about 1 hour and a half. The 5 is failing to cross below the 60, and we are supported above a trend line. So I think the odds are in favor of the bulls. 15-minute chart. Wave-wise, we are bullish. We stopped at the 78 fib, and we have intense testing of that area failed so far. This is not really good news for the bulls. So this is why I'm not doing anything until I see a breakout here. Okay. The wave pattern is indicating targets above 164.30. Okay. While other levels of support resistance are telling me that 164.15 should be a good enough target. All right. The central pivot became support right before London session. And we have the moving averages giving us a realignment setup here, which is also bullish. So my conclusion is longs anywhere above 163.10, targets around 164.15, 164.30. Reconfirmation level at 63.80 if you're not already long, and stops anywhere from 63.10 to 63.25. Depends also on your risk management. My stop is 163.10. All right, this is it for GU. We're going to move to GJ next. I'm just asking again if you guys have any comments or questions regarding what we've discussed so far. Yes, AD, sure. If you have any question, fire away, please. It's easier for me to talk about GU while we are still on the same pair. If I'm switching on to GJ, I will be focusing on that pair for a while. 6.314 seems like exactly. That's the reason why I'm looking at it also. AB 15 is a 38.2 fib of this drop. But guys, you see, after we have such a big drop with no retracement at all, frankly, yes, we are buying right now, but I am practically buying, and I am with my finger on the close button. I want to close as soon as there is any sign of trouble here. I really don't have confidence for extended rallies on GU. Frankly, I think anywhere around the 164, starting 164 up till 165, the bears might come in as strong as they did last week. So we might have something similar to this drop. And according to my wave count, this will be wave 3. It could be even stronger than what we had last week. This is why my recommendation is, if it starts dropping, do not insist on longs. Definitely stay out of longs. If you want to short, and if that's okay on your money management, then go ahead. But definitely don't insist on longs because this will be confirmed as a retracement. So the bearish bias will be very strong. 13th of October. 13th of October. Let me check. Oh, it's here. Yeah. All the rally. Indeed. You are right, AB. This is it. Also, I like the fact that we stopped very close to my key moving averages, the 200 and the 60. And the 60 so far is giving me a swing failure. This is usually what I like to trade on 15 minutes. Why not give it some attention on 4 hours as well? Because it's still basically the same idea. I agree. All right. So we stick to the long side for as long as it lasts. I really have no idea if this is going to last for more than just maybe London session today or until later tonight in New York session. I don't think it's going to be a move for the entire week. We might meet again here on next Tuesday and trade around the 161 mark or even 160. That's what I would say for midterm. All right. Let's move to GJ. Let's see what this pair is giving us right now. All right. So GJ. Okay. We start on daily as always, and we see from the first glance at this chart that the resistance is exactly the 200 moving average. Okay. Is that relevant in any way? I think it is. And I would start by pointing out the direction on the weekly chart. It is quite important. There are two things I want to show you here on this weekly chart. One is the fact that we are below the trend line is indicating a bearish wave, which so far is not yet confirmed to be over. Okay. Secondly, I see the last week's candle, the one that got us rejected at 153 and it closed at 150. It's enough to just put a horizontal level here. Okay, you see that it's very close to the previous support and previous resistance, which tells me that essentially it's the 150 level that gave us the resistance. Now, what I'm thinking, if we continue to be short on it midterm, long term, that means this level here will become resistance, and we should not see 153 again, because this should be the spike right before the drop. All right. Now, let's mark the levels of support resistance here. Obviously, we have a double top in place at 163. This is our support. You see that on the weekly, it tends to give, you see the support here gave resistance again, support again. The resistance here gave again resistance and one more time. It's the mark of the yen pairs. Very, very reliable double and triple tops and bottoms on these pairs, especially Euro Yen and GJ. All right. This is all I wanted to show you guys on weekly. We move on straight to the daily. You can see here where the trend line is. See the trend line that gave the beginning of a new wave. And this is actually a 5 waves formation down, which means we are looking at an impulse. This impulse doesn't really come all by itself. Usually there is it comes either as a wave 1 in a series of 5 or a wave A in a series of 3. I'm going to consider only the ABC scenario, worst case scenario as always, right? This is the projection for midterm based on that. Now, on the daily chart, you see that we got rejected at the 200 MA. The 5 MA is starting to look down, and it's enough to cross down and move consistently below 149, and we do get a bearish signal midterm that could actually accelerate the move down a lot. This is the rate of change breaking its trend line already, even though the price is far away from giving something like that. Now, the rate of change trend line break is a signal I'm using on the 1 hour chart for short-term trading, or on daily charts for midterm. Well, it's telling you ahead of time that a change in direction is happening, that there is bearishness underlying the chart. And I think this is something to take into account. All right? Now, once again, whether this is a big level of resistance or not, it remains to be determined. It is quite clear that we have a resistance, at least in short term, right at the previous level of resistance, which is 153. Okay, this is what I wanted to point out. It looks like 150. Yeah, 150 is level of support right now. It's an area of support. I'll mark it as such. An area from 150 down till here. 149. Previous levels of support and current 60 moving average. Now, for me, the daily is slightly bearish at this point because we got the rejection. It's quite obvious that after this rally, we are going to retrace, and there is not enough correction in this wave to justify it stopping here. We didn't really even close below 23%. I am thinking about 38.2. I'm thinking of a drop towards the 149 at least. So the direction I see for daily for the next let's say the next week is bearish. All right? But now, well, just because we're bearish for the, let's say for the next 5 days or 7 days, doesn't mean we have to be bearish right away. One thing we need to see is, is the retracement complete already? You look at the trend line here, you see the trend line was broken, and there's no need to even plot it. Obviously, the last wave down was bigger than the last wave up, so we are definitely starting a fresh wave. What's the last thing you guys heard? All right, apparently I only missed about 1 minute, so we can resume. Can I confirm sound and charts now, please? Can you guys hear me? Oh, okay. Okay. Thank you, guys. Thanks. Sorry about that. All right. So I'm not sure what exactly was the last thing you heard. What I was saying was we already retraced up in GJ up to the previous level of support, and this is where we found resistance at 150.65. Now, what I have in mind is maybe we are trying to cross above that point, but I am expecting a spike to happen around here. So frankly, for me, the 4-hour chart, the way it looks right now, looks bullish, looks like the indicators are turning bullish. I am quite certain this is happening in a on a short-term basis. So even if the indicators continue to be bullish into, well, let's say later into the week, I will not keep a bullish bias unless we are above the current level of support at 150.13. If we cross down below this level, things are changing back to bearish, and the entire wave, you see, becomes the ABC correction I was mentioning before, with the targets at around 38.2. Now, 38.2 can be just the beginning. I'm not sure that is the end of the move, but even 38.2 for a short would be a nice trade down towards the 147. All right, it's where the 200 MA is, and it's where the wave target is as well. So, bullish, a moderate bullish signal on the 4-hour chart telling me that maybe the retracement is not over yet. I'm going to try and see if there's any way we can continue higher today. This is my first scenario for today. I would say so, Jack. Yes, yes. I would advise you to be careful for as long as we're holding here above 150. We have the central pivot. We have the moving averages all at the same place, all in the same place, 150, 40, I have the 60, I have the 200, I have the 20 and the 5. They're all here concentrated in this area. Let me see exactly what the 15-minute chart is saying, because actually this one is also a bullish chart and it looks like it's incomplete. So I am definitely advising you not to take shorts right now, even if it might be a good entry close to the top. It's not safe at all. What I have in mind is, let's calculate what is the potential retracement, okay? Now, we are assuming we want to take a short, right, Jack? What is the plan? We are trying to protect ourselves from unpredictable moves, right, as much as we can. And we calculate where can it go down into a correction and still fail to give us the target. And I would say it's towards the 78 fib, all right? You calculate where the 78 fib is, and it seems to be right here. Okay. You will see in a moment what I'm trying to do. I'm trying to set up a fail-safe plan if possible. Okay, this will be the target in case we keep moving up. By the way, for longs right here, very difficult and very yes, EDS, you can find it on the internet. It's called Sessions. It's just that I adjusted it to my own trading. I'm only trading inside the blue box and inside this yellow box. I think I will have to readjust it now because, well, London session opens 1 hour light saving time. So, Sessions. The name of the indicator is Sessions. Just try to Google it. You should have no trouble finding it. All right. Now, if we see 78 fib, and if we're entering right here on your short, Jack, you see right below the 150 mark. Indeed, there is a support here at 150. But if you're entering at 150 and you get rejected right at the 78 fib at 149.60, your entry might be well, you won't really get the momentum you're expecting, okay? So what I have in mind is, let the last frontier for the longs be taken out, and you can short right below that. Frankly, I would look for a short here at 149.35, 149.40. You know what? Always make it 5 or 10 pips lower. So at the break of the pivot level at 149.34, at the break of this level, shorts are once again confirmed. Here you go. All right. That means you went beyond the 78 fib. There is no retracement. The market already finished moving up, and you would be entering late but confirmed. Stops would be somewhere quite high, around 150.50, about 120 pips of risk. However, on this setup, you can make around 250 easily. At this point, you should be well confirmed into the move. Okay? Now let's see the 15-minute chart. What do we have in short term? It's not really, it's definitely nothing clear so far. We have been trading the entire Asian session in a range. Right now we had a spike down, a spike up, and now again we are trying to break the central pivot. This for me is a clear indication that for the next 3 hours, when I was hoping to get a trade, I will not get anything. I am not going into short in this with this market condition. So frankly, guys, sorry, but for me the scenario was a long. I'm not in a trade right now, but if it's not a long, I don't have good risk management option to trade this move down. I mean, there's no way I will take a short at the break of 150 and then when the market spikes down here and goes up according to my plan, I will be stopped out. What I could be doing is see how the market goes. If it spikes down here at around 149.50 and ends the entire move down ends with a spike, all right, and I see that this has become an ABC correction, I might be going long on a high risk trade from around 149.80, 149.90 after the fact, after the drop happened, with a stop where the low is, and try to take the entire move up with the stop at the 78 fib and not beyond. That means, well, I am giving the bulls their chance at the last level where they could step in, because frankly, beyond 78 fib, the bears will take control once again. And given the move that we have before, the move that we are currently retracing, given this drop, we can expect something like this to happen by the end of the week. Okay. The same advice I gave for GU, do not fight against the break of trend line here, because that can be very dangerous. This is the trend line break that confirms shorts. I don't know if, because you see, I don't have the low so far. The trend line I can currently plot is somewhat incomplete. It doesn't have a classic shape. Normally I want to put it on the low of wave B, but the wave B is not so clear. So far I have this low. If I have a fresh high, then the trend line becomes valid. It will be like this, break of trend line and close below the support. That's it. That's where you have to get out. And switch to the bear direction. I'm looking at my indicators here on the 4-hour. It looks like rate of change is bullish. In theory, it's bullish, but it's starting to point down, okay, while the tricks is just flat around the zero line. So you can't really get anything out of tricks at this moment. It's more the rate of change that tells you there is a pulse in the market, slightly turning lower, but still bullish. So I have to keep my bullish bias for probably the entire London session. If I get something, then fine. It should be around 150.70, the break of the current level of resistance. Okay. Somewhere here, longs. Stop. Well, the stop is easier to place for such a trade. The stop will be 150.20. That's about 50 pips. And you are aiming for, let's see, something like 75 pips. That's all I can give you guys right now as a scenario for the rest of London session. I'm looking for long still. The market is choppy. That's a fact. So it can very easily swing between longs and shorts, especially when you see on 15 minutes we get the very clear picture of a consolidation by looking at the moving averages. Look at this 5 MA going up and down the 200. You don't really see this too often. You see the 200 has been down for, I don't know, maybe weeks before, and has been up for another 1 week or so, okay, when it dropped. Now when it's retracing, we are all stuck here, and everyone is is looking for basically either continuation of the bigger move down or continuation of the small move up. Both directions are favored, but for me, the longs are favored for short term, for intraday, for today, while shorts are more welcome higher up towards 151, and as a bigger direction for those of you with deeper pockets and bigger accounts and smaller positions that can afford shorting even from these levels and taking some negative. You know, there are traders who prefer to stay in the trade for a long time. They don't mind some drawdowns. They have very large stops. If that is the case, you might want to give a preference to the bears. But of course, you're not going for 20 tips. You would aim for at least 300. All right. So once again, guys, my conclusions for GJ. We're looking at a possible retracement top here. Eric B, this is a proprietary indicator. They are plotted automatically on my chart. It's called FXI pivots. We have a variety of FXI indicators. This is it, FXI pivots. And actually there are, if you look at this, these are the custom indicators that we have. We have the divergence indicator. We have the fractals telling us where the fractal bars are. The MA box, which is a proprietary indicator I've been working on myself. You can see here in the left-hand side of my screen. Then you have momentum. The moving average is a special indicator designed with one of our strategies on moving averages. The pivots and the alarm for a price. Well, you can get that sort of indicator anywhere. Yes, AB. Yes. Actually, my own course is, I can't really speak for all the other instructors. My course is structured from zero, from the level where you don't really know anything about trading, to giving you about 2 or 3 strategies, depending on your profile and depending on your objectives. 3 full strategies with everything you need to use them on a demo account or on a live account. Of course, I'm recommending demo trading at first, but the whole point is you have everything. It's a full solution. And yes, there are courses specially designed for professional traders or advanced traders. But it's really important where you start from. I'm not really giving standardized courses. It depends on the person I'm working with, and I want to know what the student knows already, so I won't repeat myself with unnecessary things, and just insist on what the student seems to not master yet, or whatever he feels he's unsure of. Yes, definitely. I have my own hedging strategy I'm using for Euro-Yen. I have an expert advisor that helps me trade it whenever I don't have the time to stick to it. But mainly, if you want to use it successfully, it should be a manual strategy. You get all the principles. It's up to you if you use the expert advisor or not. Anyway, AB, if you need any more details on our courses, I invite you to check out our website or just email me directly. I'll be happy to assist you. All right, this is my email. Just a final word on GJ and our conclusions for today. As I said, the daily chart looks like starting a retracement. We are most likely at the beginning of it. We bounced right at the 200 MA and an important level of resistance, 153. Okay, now we'll see how long this takes us. It could be a retracement or it could be a very big drop. This is really something I'm open to. I don't want to anticipate since I don't really know where the market is going. I will be following the signs for continuation or retracement. The 4-hour chart gives me moderate bullish signals right now, but I would only trust these signals for short-term trading up to about 151, 151.30. That's all I would try to take for today, intraday. And already the short direction is indicated here for later on, whenever we bounce from this ABC correction. 15 minutes, moderate bullish, but very, very choppy and likely to give you trouble. Already you see it spiked down, it spiked up. if you are just buying the breakouts, you could have sold here and buy here and get stopped out twice. This is why I don't like trading before the market makes up its mind where it wants to go short term. And with the moving averages looking like this is a sign of trouble. This for me spells trouble. I don't really know if later today I will be taking the long side. Frankly, I prefer the longs. I'm going to look for 150.70, but probably if I take the trade, it will be a half position, not a full lot as I usually take. For the simple fact the market is very choppy, and I will have my stop at 150.10, 150.15 at most. And I don't want to risk 65 pips on a trade that is only likely to give me about 70 or 80, and even those pips are going to be difficult to take. Most likely it's going to be a slow move. Higher highs will be difficult to make, and the spikes can be rejected very aggressively here. You will have a lot of doubt, and it's normal to have doubts because we are retracing, so the bulls are not really very strong. All right, guys, I think this is it for today. My time is up. If you have any questions, though, I will be happy to answer on any of these two pairs, GU and GJ. No problem, Small. Pleasure as always. All right. If there are any inquiries, I will be in the room for the next few minutes, so don't hesitate, please. You have my email there. And also visit our website for more information on our courses and live trading room at fxinstructor.com. Thank you very much, FX Street, for the time in the room as always, and I'll see you guys next week. Trade well and have a good one.